Many entrepreneurs starting a new business are curious about the comparison between a private limited company and LLP, that is, Limited Liability Partnership. Both entities offer many similar features required to run a small to large sized business while also differing starkly on certain aspects. Hello and welcome to Company FX. I am Beauty Watts and today in this video, I'll be telling you the difference between private limited company and LLP. I'll be giving you the comparison from the viewpoint of an entrepreneur starting a new business. So, we'll be starting the difference with registration process. The private limited company is registered under Companies Act 2013, whereas LLP is registered under Limited Liability Partnership Act 2008. The private limited company registration process and the LLP registration process are very similar with some differences in the documents and forms being filed for incorporation. The steps for incorporation of a private limited company are obtaining digital signature certificate for the proposed directors, which is called DSC, obtaining director identification number for the proposed directors, that is DIN, obtaining name approval from MCA, that is Ministry of Corporate Affairs, and filing for incorporation. LLP registration also has a similar process. Obtaining digital signature certificate for the proposed partners, obtaining director identification number or designated partner identification number for the proposed partners, obtaining name approval from MCA, and filing for incorporation. Both private limited company and LLP are registered with the Ministry of Corporate Affairs and are issued a certificate of incorporation. The processing time for incorporation of a private limited company and LLP are also comparable, with both entities taking on average about 20 days to incorporate. Registration cost. The government fee for incorporation of a LLP is significantly cheaper when compared to the government fee for incorporation of a private limited company. LLPs have been introduced to meet the needs of small businesses and hence LLP enjoy lower government fee for incorporation. Also, the number of documents that have to be printed on non-judicial stamp paper and notarized is lesser for LLP registration when compared to that of a private limited company registration. Directors required. Private limited company requires minimum 2 and maximum of 15 directors. LLP requires a minimum of 2 designated partners and maximum designated partner is not applicable in this case. Now, talking of members required, private limited company requires minimum 2 members and maximum of 200. On the other hand, LLP requires minimum 2 members and for maximum there is no limit. Next, talking of meetings to be conducted. In private limited company, minimum 4 board meetings are required during financial year, having a gap of 120 days between 2 meetings. And the general meeting of shareholders is to be conducted once in a year mandatorily. On the contrary, no requirement of partners meeting is there in LLP. Features. Both LLP and private limited company offer many of the same features. LLP and private limited company are both separate legal entities and have assets and liabilities that are separate from that of the promoters. LLP and private limited company are both transferable, though private limited company offers more flexibility when it comes to transferring or sharing of ownership. LLP and private limited company both have perennial life unless and otherwise closed by the promoters or a competent authority. Ownership. Private limited company offers more flexibility for the promoters when it comes to ownership and ownership sharing. The ownership of a private limited company is determined by its shareholding, and a private limited company can have up to 200 shareholders. Further, since the shareholders do not directly participate in the management of the company, there is a clear distinction in a private limited company between the owners of a share and the management. Hence, private limited company is advantageous when it comes to ownership and management features. In a LLP, there is not a clear distinction between the owners and management. In a LLP, the LLP partners hold ownership of the LLP and also hold powers to manage the LLP. Therefore, a partner in a LLP will be both a owner and a manager. Whereas in a private limited company, the shareholders do not necessarily have to manage the company and have the management powers. A private limited company is recommended for any business that is considering FDI or employee stock options or equity funding or venture capital funding. Compliance. Tax compliances are similar for both private limited company and LLP. However, when it comes to compliance relating to the Ministry of Corporate Affairs, LLP enjoys significant advantages. LLP does not have to have its accounts audited if the annual turnover of the LLP is less than 40 lakhs and the capital contribution is less than rupees 25 lakhs. LLP would, however, have to file LLP Form 8 and LLP Form 11. A private limited company, on the other hand, would have to file annual return audited financial statements with the Ministry of Corporate Affairs each year. Fines and penalties. The penalty for non-compliance or late filing of documents with the Ministry of Corporate Affairs are most of the times higher for a LLP, as a flat fee of rupees 100 per day is levied when the non-compliance continues with no cap on the liability. Therefore, LLPs could incur larger penalty or fines from Ministry of Corporate Affairs due to non-compliance. Therefore, it is important for the promoters of a LLP to be aware of the due dates and file the required documents with the registrar on time. So that was all about the difference between private limited company and LLP. For more information, you can check the link in the description below. If you like the video, please subscribe to the channel. Thank you.